Heidi ho, everyone, and welcome aboard. It is Thursday, the 7th of the 7th, and I'm so pleased you could join us for Trading Buddies on this day. It's lovely to have you with us. With me at the moment, I've just got a little bit of a... Thank you, Marlon. What have I got? I've got a share screen button. Found it. It was missing there for a while. Okay, let's get stuck in and explain this what's it called, breakout trade at London Open. Okay, so we've been trialing it this week, didn't get an entry on Monday. We got an entry yesterday, entry here going short, got our TP1, no TP2, which was down here somewhere. This is very, very similar today as to where we were yesterday. If you haven't closed this already, then you're still in the trade. Stop loss is up here somewhere. I have actually closed the trade, so I could actually place this one basically. But so I've had a small winner on this one, very, very small, because it's only in test mode and we're only trading at a very, very small risk. So what today? Well, I've depicted the range. Those of you who aren't aware of the way we're trading this now, I have chosen to trade the breakout of Asia session. And Asia session begins here with Tokyo Open. That's at 0200 on most charts, I would think. And the range bottom is here. The range top is here. And now we need to find the midway point. Today, those parameters are 1.1908 is the low of the range. 1.1965 is the high of the range. And the midpoint is 1.1936. Now, if in 3 minutes time or 2 minutes time or whatever it is, price is above that center line, I will place a short order, and there will be TP1 and there will be TP2. TP1 is simply 1-to-1, and I have been removing half of the position at that point and doing nothing else. So in other words, the stop loss stays where it is, and the targets remain with, or sorry, the target remains at 2.5 to 1. So in this case, 2.5 times, what's the risk? 28 pips, 28 pips. So 2.5 to 1, 56, and 14 is 70 pips. So 70 pips from 1.1936 would be 1.1966. I've actually got it too low. 66 is what I'm after. There we go. Roughly thereabouts. Okay, so with about a minute and a half to go, nothing to do yet. Just mark those points on your chart. Again, if price is above the center line of the range, we place a short order, nothing else. And if it's below the midpoint, we place a long order, nothing else. Some people wanted to know where or when we expire this. I think it's wise to expire it at end of day or just before end of day if it hasn't triggered. Righto, I'm going to place this on the trade manager so I don't have to keep coming back to it. I know what my levels are. So we'll be going short as soon as this candle closes. And the level will be, again, guys, if you want to trade this, we don't know if it works or not consistently. So very little risk if you are going to trade it. Very little risk. If not, nothing. So the entry is going to be at 1.1936. And the stop loss is going to be, I'll just put a couple of pips on top of that one. So it'll be 1.1967. It'll just account for the spreads. 0.1967. And get rid of that. And TP1. I think I've got time. Actually, I can do that later. I'll disable it for now. and disable TP2 for now and sell. Okay, so there's a stop loss. You can't see our entry because it's bang on the line there. There it is. I might as well take that away now. And we're good to go. All right, if you've got any questions on that. Hi, Lewis. How you doing, bud? If you've got any questions on the way I'm trading that now, please let me know. So far, we've had no entry on Monday, winner Tuesday, and a little winner for me yesterday. But that's because I haven't closed. It's because I did close the trade. Stop loss is up here, and TP1 was down here somewhere. So we got TP1, no trouble, but we didn't get TP2. Righto, that is the pound versus the US dollar. Interesting, the pound, really interesting. Boris is in a whole lot of SH1T again. Really interested to get Ash's opinion on what happens when they kick him out. It's not a matter of if now, I think it's a matter of when. Apparently, a truckload of his parliamentary friends or members of the same party as him have gone, like 40 or something. Amazing stuff. Never been seen before. So they've all resigned, but Boris, no, he's hanging around. He's going nowhere until they kick him out. But it can't be far away, surely. And I'm trying to go through my head, what's this mean? What's it going to mean to the pound? Are people going to go, thank God he's out, and this is going to be good for the economy, good for the pound? Or are they going to say, oh, we're now in complete turmoil? Maybe that's what's going on. Maybe they are in complete turmoil. But the market doesn't seem to be doing anything at the moment. As you can see, it's just flatlining since Wednesday when it did go down and have a nice little winner for us. Anyway, that's the pound. I think Ash will have an opinion on that. Speaking of the pound, I have 2 orders in the market. Not sure about this now because of the Boris thing. I've got an order long above this bar here. It wasn't triggered. Must have gone very close to being triggered today above this bar here. And the reason I like this is, well, when I say like it, fundamentally, I can't give you a reason why the pound would outpace the Aussie at present. Though I'm not a massive fan of the Aussie, it's very difficult to be a fan of the pound as well, given the question that I just asked myself and I haven't got an answer to yet. Ash will give me an answer. Whether Boris's exit is going to be good for the pound or otherwise. I suspect that this will be kind of balancing on that teeter-totter until we actually know the result of that. But the reason I like it, if you look at the sentiment cycle, this looks very, very, very much like a sentiment cycle to me. And if that's the wall of worry, then this is potentially an aversion point, and that's why I want to be in. There should be plenty of time to build a position on this. When it gets through that level, they generally come back and retest it, but then they go like a rocket. And if that's the case, this should be a very, very, very rewarding trade. If it goes to here, of course. I can't tell you why, as I said, it would, but the chart's telling me that that is a distinct possibility. So that's one order I've got in the market. Another order I've got in the market is Aussie again, Aussie, this time versus the Kiwi. And this time short the Aussie, same thing. I'm short the Aussie both ways. So you might want to think about that. If you are trading these pairs, you would need to aggregate your risk somewhat. I've only traded this at 0.25%, traded the other one at 0.5%. This could go either way, of course. But the reason I'm trading this one is it does look toppy. It does look a little bit like a Head and Shoulders, big ugly head there. In fact, we've got 2 of everything, 2 shoulders, 2 heads, 2 shoulders, if that is to be the case. That's not the prime reason I want to trade this. The reason I do want to trade this is because of that bar followed by that bar. That's what I call a game changer bar, and that's an inside bar on the backs of that game changer bar. So it becomes a game changer plus for me. Game changer pluses, of course, like all things, Yes, yeah, the Boris issue does make it tough. Absolutely, I agree, Lewis, for sure. But it's going to go one way or the other, isn't it? It's either going to be a positive or negative reaction. And I can't tell you what that's going to be. As I say, Ash might have a good line through that. So game changer bars, like everything, have to have context around them. And the context I see here is inconclusive, but that potential reversal pattern does give me a little bit of confidence that this can disappear, similar to what I've just described on pound Aussie. Not surprisingly, this is an upside down version in some respects. If we get down to here, then it makes the trade worthwhile. If we don't, of course, then that's just the way the bookie breaks. You can see that range that we've been sitting in for like 9 years, best part of a decade, we've been sitting in this range, and we're very, very near to the top of that. It's also come back, well, it hasn't come back below, it hasn't settled below 110. And my mantra is whenever the Aussie is 110 plus against the Kiwi, it's time to sell it. So that's why I've got a few things going for me here. One's that belief that 112, certainly we nearly got to 112, is too much for the Aussie and versus the Kiwi, and anything above 110, as I say, should be a sell zone for Aussie versus the Kiwi. And you can see, as I said, going back in time, that is very much a proven thing for the last 10 years or nearly 10 years. Every time it gets up here, it just disappears again. So I'm kind of banking on that happening this time around. It may want to go one more time before it reverses. If that's the case, then so be it. I hope it goes without taking me in. They're the two orders that I've got in the markets. No other trades at the moment, apart from that, the pound breakout. Has that triggered yet? No, it hasn't. I do have a few things on my mind. In particular, one of them is why I'm not making truckloads of money this week. I say that because massive bear the euro, of course, and I've been trying to get in front of the charts as often as I can to get into the euro short, but not happening. I've missed every single one of them. My trade of the week was euro Kiwi, and I'm not even in that, and that's kind of given me a heebie-jeebies just a little bit. But there may yet be an occasion where I get to do that, because we've got the three little Indians sitting here. I believe it's going to break to the low side of this range, so there's still time if I can get a decent pullback and get that lower high that I seek. All the time, the three little Indians, they seem to be doing their job very, very well. I refer you back to the gold chart, 1, 2, 3, and look at gold. OMG. It's just falling, falling, falling. And, remarkably so. It's not just fooling around anymore. This is big moves on the gold. And I'm not in it. That's what's giving me SH1Ts. I'm missing a lot, leaving a lot on the table, but you can't be in front of the charts all the time. It's as simple as that. Let's check in with Ash and see what's going to happen with the pound when, I believe, not if, they kick Boris out. How are you doing, buddy?
Oh, yeah, not too bad, mate. Yeah, the gold's interesting, isn't it? Because you always say you shouldn't trade gold, and yet you were the soothsayer when it came down to this one.
Yeah,
I
it's
am
amazing,
still in along with gold. I've literally just hedged out the position, which is way too late to be hedging, but it's all I can really do now. I'm just trying to sort of pick up some scraps on it now, but it'll turn out okay. As long as it comes down a bit from here, everything will be fine. But if it starts to rally from here, I have got a lot of work to do. So
it's a hell of a weekly bar so far, isn't it?
Yes, it is, and it's interesting because we're only in Thursday, so things could change, obviously. Sure. And if we get an out and out rally, why people buy gold and do what they do with gold is completely beyond me. So it's possible that you get the rally. You never know. Hey, Lewis. What I'm looking for now with gold is for it to come down and test those lowest points on your chart in the most, there.
Here or here.
Yeah. No, down about there, yeah. So I'm actually going to start buying up again.
There are a few, aren't there? There's kind of one there.
Yes.
There's kind of one there.
Yes.
And there's kind of one there.
Yeah, yeah. I mean, that would be incredible. But my idea would be to buy on the first one, leave the hedge on the table, but put the hedge on a stop. So if it does rally and takes the hedge out, then I might be able to clear out the positions. But if it doesn't, then and it goes through without stopping out the hedge, then I'll be back down to just one long position, which is okay. It's manageable. So as I say, I'm a bit late with this one. I see the problem really for gold with me for gold is that I'm not as familiar with it as I am the FTSE. So when I am employing my particular strategy, or I guess, or approach on the FTSE or with gold, I'm not really privy to the same information. I'm just not as acquainted with this particular product. But you know, I think things will be okay. I'll figure it out in the end, and it'll no doubt sort itself out. The euro I find really interesting because we are seeing the ECB change course on interest rates this month, 21st of July. We're looking for the first rate hike. The euro is below its 2014 level. Before it
against the dollar, we're talking, are we?
Against the dollar, yeah.
Yep.
So it's below the 2014 low. And the reason that that's significant is that was the year that they lowered interest rates to zero. So
right here.
it will need, yeah, it's going to need to stay on course with the rate hikes from here on in with the dollar. But if it does, I suspect parity might well be the buying area that people might start coming back into the euro if they are now changing. Big problem for the euro is the data is really, really tepid. We're looking at PMIs right across the board, services sector and manufacturing sector, both shrinking. You know, they're both coming down. So while we've got this, and we've obviously got inflation raging, you know, near 9%. So we've got high inflation, we've got low growth, and those numbers will start filtering through, I think, more and more. And yet we've got a central bank on the move. So for the euro to rally, really, it would have been better off if some of those data points were supportive of a decent hike and a decent hiking cycle. But because they're not, that parity may still not hold. But you'd think that with the eurozones, you know, the ECB starting to potentially move on the interest rates, that might start to help the euro see some upside. And as I say, particularly if you sort of like take into account of the 2014 low, because that was the zero rate. You know, that's when we just lowered it down to zero, and we hit those lows. But ever since then, it's kind of been in this weird range really between 2014 and now, and it looks like a bit of an M pattern, but it's obviously not an M topping pattern because we're not a top. So what happens from here will be interesting. What's the red line price there, mate?
That's where it's going, mate.
That's where it's going. Well, what price?
That's
what price?
It's my bottom lines right there. 98, 95, 96.
96. So yeah, so it's around about parity, and I'd be completely in agreement with you. I think that between parity and around about then, we might start to carve out a bit of a low, but it will depend on, I think, whether the ECB can say, right, we're going at 0.5%, and the Fed go at 0.5% from here on in. So they now stay in sort of in line with what the Feds are doing.
I'm going to say, I think it's probably more about this one than it is about the euro.
Undoubtedly. Dollar, yeah.
Yeah,
and you've got a little bit more room. I'll tell you what I've got with the dollar. If you draw a trend line from 2014, is it December the 1st, 2014? From above. No, actually the one back from there. One back.
Here.
There. And then draw a trend line up.
Through here.
A bit higher. Just to take out.
Let's
see the high. Yeah. That's the area that I'm wondering whether we might actually end up, because we've got this broadening pattern potentially forming now. I mean, I don't know whether it's going to get. I don't think it'll take that long. But if you put that line near enough just above where price is now, and let us know the price of that. Yeah, let's have a look.
When you say just above where price is now.
Yeah, so about there, isn't it? Yeah, yeah. So potentially testing those levels, I think it's possible. Was that 112? Is it?
Yep.
Yeah. So
I got 108. You got 112.
Yeah, so somewhere around that area might be a you know, another resistance point. Obviously, we're at them now, but the Fed's minutes yesterday suggested front loading. So while they're on this kind of front loading narrative, it doesn't really suggest that we should be going short the dollar, which is, I guess, one of the reasons that I decided, you know, maybe hedging out the gold scenario might be wise. So you know,
I do like this though. It's coming down. I mean, it's coming down.
Yeah, it will eventually, won't it? It will eventually. You know, things don't last this long. It's just what's going to drive it. You know, it's really difficult to know what's going to drive the dollar down because of the rhetoric. And it does suggest as well that you know, the Nasdaq and the S&P and all that stuff is probably going to do something similar. I mean, I'll show you what I've got on my charts here.
Mm-hmm. I'll go back to the euro, Lewis. Don't worry.
So this is what we got with. So I've got a few things going on with the FTSE right now. I'm slightly edged to the short side on the FTSE, but I wouldn't mind seeing if it could come up here. We got just so I can close these long positions off and leave that short on the table. But this is the trend line right now, that if it can come up, I would be surprised if it was to go through. So if it comes beyond this level, then all good. This is, as I say, slightly edged to the downside. But if it can come up here and these positions close, then it starts to kind of make this sell position a bit more interesting. But you know, that's, as I say, that's now kind of in a situation where in a way, I'm hedged long. I'm hedged on the short, because the short is really where the money is for me. But it's got to come through these levels to really start making some gains on these points here. But the same with the Nasdaq. The Nasdaq has got something similar, where with the Nasdaq there is also a potential for this to push a little bit further before it starts coming down. That's the trend line I'm looking at right now. And I think a lot of people will be looking for this to be an inverted head and shoulders potentially forming. So this high here would be where I would want to go short on the Nasdaq, around about the 12,200 level on the futures. So not really keen on the short here, but things don't really support a rally. Do you see the FTSE 100 gap dropping concurrently? Let me see. FTSE 100 gap, that's from Lewis. I don't see gap. I don't see the gap, Lewis. No, I don't see the gap. I think markets have still got some room to come down. I think that's the key here. The pound. Oh, and yeah, let's have a quick chat about Boris Johnson as well. So,
I was going to say, is he going to affect the FTSE?
I would have thought so. Yeah, I would think so. I mean, it's similar to what.
And the $1 million question is, in what fashion, what way?
Well, I would have thought it'd be quite negative. I mean, the thing about what's been happening recently is Rishi Sunak, sorry, Lewis, I don't fully understand what you're looking at there, but if you can just make it a bit clearer, or come on, it's no problem, mate. We'll have a look at it. So Rishi Sunak is his chancellor. I mean, Rishi Sunak has resigned, and Rishi Sunak's reason for resigning was saying that Boris Johnson's effectively inflating the news and not being completely upfront and honest with the UK public, and his position economically is different, is quite a long way away from Boris Johnson's. And unless Boris Johnson comes out and tells the public that actually this is going to be painful, he's basically saying that he's out. So it would suggest that Boris Johnson's, I guess, more expansive policies would then be taken out the equation if he decides to leave. And there's even a chance that Labour get in. And similar to in Australia, Labour tends to be worse for the markets. You know, a Labour government tends to be worse for the markets. Tony Blair might have been bucking that trend, and Keir Starmer is a kind of Blairite. So you know there might be a little bit of hope for the markets there. But if Boris Johnson was to leave, we're back into uncertainty again. I mean, you remember the pound, mate, during Brexit with Theresa May. Is she in? Is she out? Is she in? Is she out? When she wins a no confidence vote, the pound starts to rally. Then the pressure's back on. The pound starts to come down again because we know the markets hate nothing more than uncertainty. You know, even bad news is something that they can that the markets can start to figure out because it will just recalculate what the price of whatever product that is trading should be, whether it's the pound or the FTSE or whether it's a particular stock. But the market doesn't like uncertainty. So if the leader does leave, and probably a leader like Boris Johnson, who does seem to be quite supportive of growth in a very, very difficult time, it would probably have a negative effect on the pound, and it would probably have a negative effect on the FTSE as well. And this might be one.
I was just thinking that perhaps the reverse may be the case also, if you consider that basically they're in turmoil now, and therefore that creates uncertainty, I guess. But didn't I hear today that something like 40 of his mates, of his party members, 40 have actually resigned? Didn't I hear that?
It may well be, mate. I'm not 100% sure on that. And if you went through the list,
I'm pretty sure that's right.
Do you know the biggest problem that they've got now is that they challenged him with a no confidence vote within the last month. Now, if Rishi Sunak no, they can't do it again for at least another 12. So if Rishi Sunak had resigned before that period, then he would have been out. I would say unquestionably. But now Boris Johnson is he's kind of got things in his favour. People might go and ask him to leave, but he's not the kind of guy that listens to other people on that respect. He's the kind of guy that wants to stand and fight for his reputation, if nothing else. I don't know if he's fighting for the country.
How many members of parliament are there? It's 400 or something, aren't there?
650, 700.
650. So let's say he's got 360 or 70 or something on his side.
Yeah.
And 40 of them have just walked out the door.
Yeah.
That can't be good. That cannot be good. Surely he's got to go.
No, absolutely right. And that would trigger by-elections. So, you know, you might sort of end up getting a situation if enough of them resign where they have to go back to the polls because actually Labour have got more seats than the Conservatives. You know, because of all the leaving. But I think
that would be interesting.
Yeah. I mean, I don't know what happens then, but I think you'd probably have to lose another hundreds or so Conservatives for that particular situation. Which, you know, considering where we are right now, that could happen. And this is I guess one of the results of this high inflation, overspending, money printing situations that we've been talking about for the last few years. You know, we've been talking about it in the US, how there will be blood on the streets and how there will be a breaking of the dollar. Well, we might actually see a breaking of a government right now. And you know, let's make no mistake about it. It's because of the events. You know, if these events hadn't occurred, then Boris Johnson wouldn't have had the situation that he's had to deal with in front of him. So he would have had a much easier time of it. And of course, Brexit hasn't helped, but it's only part of the story. You know, Brexit, coronavirus, and now the Ukrainian conflict, the conflict in Ukraine, and raging inflation because of supply chain issues, which is really to do with coronavirus, and excessive money printing has created a situation where things are going to break. And we might well be starting to see just the first sort of thing, because you don't know, you know, it's a bit like Franz Ferdinand being shot in, you know, to trigger the First World War. He seems to be a relatively not completely insignificant character, but he wasn't one of the biggest players. And it might be sort of like something that happens across the globe. If you start to see something happening in the UK, Paul was telling us the other day about the house situation in New Zealand. These little things that are going on might just be sending us little messages about what's about to occur, because the UK blowing up is one thing. The US blowing up is a completely different story. As I say, that may well happen. You know, the same things going on in the US. Of course, they're not quite as exposed to the Ukrainian situation because of geography, but they are exposed to coronavirus. They are exposed to supply chain issues. They are exposed to inflation, and that might be enough to start putting people up against the current administration. Which is really what's going on in the UK. So difficult to know. And then you've got climate change. Yeah, lots of exactly. We've seen the first kind of wave of it. Things start to calm down, so people get a little bit more relaxed. But actually, these things do go in waves, and it might be towards the end of the summer that we see the next wave. I don't know, but things don't look great, do they?
No, this is a bit of a doozy situation, this one, as you've described, all of those things. And, it seems every couple of years, there's no longer one or two scenarios that we have to consider on the world scene. It's 4 or 5, and that's the case at the moment. That really is the case at the moment. And Brexit hasn't even gone away yet, for God's sake.
No, it hasn't. And Keir Starmer, the Labour leader, has basically said, look, we're not going back in to the single market, which was a surprise. He was a very much a supporter of the Eurozone, but I think he's right personally. I was also a supporter of staying in, but I think now going backwards is not the answer. I think the UK is going to have to swallow the pill and figure out how to get through from here on in, and see if they can create the better future that they believed was on offer. And I also think
how about stable government? That would be a good start.
That's a good start, mate. Yeah, very, very good start. But
and truly, nobody's got one. I can't think of a country in the world that's got one. No, they're everywhere. Nobody's got a stable government. They're all fighting.
No, absolutely right, mate. I mean, Germany had the best shout when they had Merkel in, but that's obviously changed now as well. So. Yeah, who knows? Who knows what will happen to governments, and whether they'll be toppled, and new sort of powers will arise. It's difficult to see the future, but as I say, it looks like we're still in the early throes of all this stuff. I looked at some of the inflation numbers yesterday, and inflation in some parts of the world is just crazy. Brazil,
it's outrageous.
It's absolutely mad, but.
I mean, if you can't see it from where you sit, I would be extremely surprised, because you can see it everywhere you look. Every single
you can, mate. Well, this is
going up.
So what's happening right now? So this is the Nasdaq is
Taj Yul, by the way, has got Boris flying to Kyiv to see his best friend.
Who? What's that? Sorry.
Taj Yul on YouTube has got Boris flying to Kyiv to see his best friend. I'm not sure why, but.
I mean, it's
that's his prediction.
When
he's out of a job, I guess.
When he's out of a job, when he's out of a job, all that stuff. Boris Johnson's very good at portraying the right message publicly, as crazy as he is. But the thing about Boris Johnson is that all the kind of things about him, about him being a bit of a buffoon and reckless and everything else, is all well and good when things are going okay. But eventually things do come back, and chickens do come home to roost eventually, as we saw with Trump in some respects. So I don't think he can. I mean, he's pretty tough, as we've seen, and whether he's tough because of arrogance, or whether he's tough because of pride, or whether he's tough because of a sense of duty, difficult to know exactly. But he's tough, and he may well survive this one as well, but they'll get him in the end. They will get him in the end. So he's saying, I just don't understand all the Western leaders going around. He
won't survive this one. He's gone now. I've got him gone.
Well, yeah. and no time to manage their own backyard. Well, yeah, exactly, Sweet. Absolutely right on the money. You know, why is it that everybody thinks that they can go into somebody else's area and affect it? Where this is Sweet's point. Why is it that Western leaders can go into other people's areas and affect it when they can't even get their own house in order? And it's happened through history.
The US are the absolute world champions at that. Absolute world champions.
Yeah. You know, in the UK is not too far behind, mate, because they are basically their laptop. But you're absolutely right. It's, you know, it's
the UK in going back in history. I mean, every empire has been the same. The Roman Empire. Now we've been through your country, who've left terrible scars behind. Yep. The US now, who are leaving terrible scars behind everywhere they go. And I agree with you, Sweet. What makes them think that they have the right to do that? And the answer, of course, is power.
Yeah, absolutely right. Power and money. Because they're not, you know, if they were going in for the reasons that they portray, which is to make sure that the atrocities aren't committed, then I think we'd all be okay with that. Because even if they're making a mistake, they're trying to do it for the right reasons. But we know most of it is because they're trying to control the worlds of commodities, you know. So they can effectively, in some respects, they are trying to take care of their own backyard. That's the kind of perverse thing about it, by controlling what the other nations need to do and controlling the way other nations have to live. I guess, but it's. Yeah, it creates a mess. You know, we've seen in Iraq, we've seen in Afghanistan, we've seen in Vietnam. You know, less recently that Western involvement in other nations just isn't a good way to go. You know, it's just not a good idea. So,
nope.
You know, I don't know. Anyway, this is where we are, and actually,
how do we trade all this? I suppose is the question.
That's the question, isn't it? So, anyway, to the Nasdaq. Now, the Nasdaq is starting to see a rally. US investors are relatively happy right now because they are looking at the Fed and thinking, okay, where is the point they're going to stop? Will they stop at 3%? Because if they stop at 3%, we can take that. We can handle that. What they don't want to see is 4% and above, because that's when profit lines from this particular point become affected again. So what we've seen is a dip to the downside, obviously, but let's not call it a dip. It's a pretty bad spanking to the downside on the Nasdaq. Things have revalued here at this particular point. This is the price of the Nasdaq. Things have revalued here. Now, is this the value of around about 3% interest rate hikes? Probably it's around here, but it's not the value of a 4% north of that. So what they're trying to now ascertain is how much further do the Fed need to go? Now, central banks and central bankers are coming out and saying inflation looks like it might get stickier than we thought. And it's again, it's like, are you kidding? What you said it was a transitory initially, when everybody's saying I don't think so, and now you're coming out and saying, then you come out and say it's not transitory. We won't need to raise interest rates. You could probably do. Then they come out and say actually we probably do need to raise interest rates. Inflation's stickier than we thought. I mean, really, they seem to be way behind what the information that everybody else is getting is saying, and that suggests they even haven't got their finger on the pulse, because they're a bunch of pen pushers and they're not as qualified as we give them credit for. I'm not saying Jerome Powell. Jerome Powell sits at the top of the tree, probably a very, very intelligent man. He's probably got his finger on the pulse, but the Fed isn't just made up of Jerome Powell. The Fed isn't just made up of the St. Louis leader or the San Franciscan leader or the New Yorker leader. It's made up of a whole sort of like slew of people, but beyond and beneath that, analysts and, everybody else that's involved. Maybe they're not as gifted as they're getting paid to be. So they seem to be behind the curve. They're saying it's getting a bit more entrenched, and that would suggest that we probably are going to get interest rates higher than 3%. So a NASDAQ rally from here seems to me like a selling opportunity, but I don't think it's yet. I think we might well see a push for the Nasdaq and the FTSE as well, which is why I haven't closed every single long position on the FTSE, because I think that there's a chance that we do actually kind of get up to these levels, and I don't think we get too far beyond. But I'll only probably close one off here, even though there's resistance there. And then if it comes up, I'll close this other one somewhere in this zone here, and then start adding to the short positions, because I think it's coming down. But actually, the market looks okay. You know, the market doesn't look in too bad shape today. But I don't think it's going too much. You know, I don't think it's going too far, because where is 3%? I don't know. Maybe sort of around this area here. Could be the 3% area, and that's where sort of the shorts start to come back into play again, as we kind of get the next announcement. But a little bit of a rally on the FTSE, the Nasdaq, and the S&P looks likely to me. It looks like we're probably going to get it, and maybe even gold as well. I might reconsider my hedge. You're still there, mate. Sorry, I thought you'd frozen.
No, I'm still here. I thought you were ticking over, looking at your hedge, so I didn't interrupt.
I am looking at my hedge. I am going to have a good look at it in a minute. But should we go back and have a look at the euro that you were going to talk about, and see
Absolutely.
where we're at with that?
Yep, you do what you're doing, and I'll go back with that, and we'll see what we can work out.
Great stuff, mate. All right, I'm going to figure out this hedge, whether it's worth keeping on or not.
Okay, now, Lewis, you were talking, I believe, about moving this line from where it was here to here. How am I going? Is that pretty much where you saw it? Oh, I've lost the chat. So I don't know if you're going to answer me or not. Chat. There we go. So the reason I had it up there was because Ash was pointing out that that was the 2014 low, where which was a significant level. I think that's a bit of a cloud of a price, to be fair. So anywhere in there kind of works. The interesting point I think about the euro right now, and I mean, I'm on a monthly chart. Weekly chart's doing pretty much the same thing. Daily chart has already closed below that level, and that's a bit of a concern. But I was very, very surprised to see that happen, because this is such a strong level. I expected a bounce of some kind here. To where, I don't know, but I certainly expected a bounce of some kind. Not that I'm bullish the euro at all, but I'm so bearish the dollar that that's what I thought might happen. And I think going back to the dollar is worthy of our attention as well. I see this as a stumbling block. What is it, 108 for the dollar index? Why? I don't know why. Maybe the Fed says something, maybe they don't, from a fundamental perspective. But regardless of what the Fed says, this to me looks like a very, very strong setup coming along that we're building into. And it's hard to ignore that, I guess. But, you know, false breaks do happen. So I'm kind of inclined to think we're in that position at the moment. And like I said before, this is a rising wedge. And to me, that means this is going that way. So are we at a point of interest? I think we probably are, or getting very, very close to it on a monthly chart, of course. But the weekly scenario, once we get to that level, which is the 108 level, what are we at the moment? 106, very, very near 107. So there's not far to go. And we've got a long way to go towards the end of the month. We've got 24 days to go before the end of this month. So I think that this monthly candle, as bearish as it looks, and though it's not finished, may well finish up above that line. That's kind of what I'm seeing. So put the two together, that's kind of where I'm at. No, I'm not a euro dollar fan at all, but I'm certainly not a dollar fan. So it'll be interesting. It'll certainly be interesting to see how that pans out. Putting the euro outside of the dollar makes it a very attractive thing to me to trade it short. The pound is now, in the land of who knows, God knows. Ash, and I wanted Ash's opinion on that. What happens when Boris goes? As I say, when, because I can't believe this has never happened in history. What I heard today, and don't quote me on this, but I'm pretty sure it's something like 40 odd of his team actually resign. That's
Yeah, I'll have a look at
unprecedented.
that, mate. I'll have a quick look, see what
Yeah,
I've got
okay.
with that.
And if that's the case, surely he can't survive that. That just doesn't make any sense to me. But again, the question becomes, is that good for the pound or bad for the pound? And I've got a funny feeling it's actually good for the pound, because it does take away all this uncertainty. No, it doesn't take away all this uncertainty. It takes away the uncertainty around that, whether that is true or otherwise, or whether that comes to pass or otherwise, is of course yet to be seen. And I'm really not in a position to judge that. I have no inside knowledge. I have no economic credentials. It just, to me, says for a brief period of time at least, there'll be kind of a release valve, and the pressure will be let off, and therefore the potential for the pound to rally and the dollar again to find that resistance level is appealing to me. Of course, I'll wait till there's a setup, but if there is no setup, then it's a moot point. We'll see. We'll see what happens. But Euro pound would be one of those that I seek to trade short. Euro Kiwi, as I said, that was my trade of the week because of the Three Little Indians. But with Three Little Indians, like everything, and I think, Lewis, did I call this something before, or did you put forward that name? I think I'll change it, because Three Little Indians is a recognized chart pattern in technical analysis. And I don't think it's got anything to do with my setup, right? So let's change it to the Three Amigos, officially to the Three Amigos, on your suggestion. I think it's a great idea. But look, I was absolutely keen on this, getting short, and short down to probably about here somewhere. And it's really annoying when you just can't do it. Couldn't even do it on the 4-hour chart. There was no setup. Hourly chart, if you happen to be in front of the charts, maybe, just maybe, you could have got in on this bar here. That would be the only thing that I'd want to trade in that circumstance. But now, geez, so annoying that it's gone,
52,
more than
mate.
halfway. 52.
52.
Well, there's even more. Right, there you go.
Yeah.
That's just outstanding. He can't survive that.
Well, do you know what? I just had a look as well. 200 members of Parliament are Labour. 358 are Tory. So there needs to be another hefty swing. They need to lose another 100 really for things to really significantly change. But there are MPs descending upon number 10 as we speak.
I can't imagine why.
Yeah, well,
I know why. I know why.
Yeah.
He must be having a party.
Well,
he's having a COVID party, right?
The thing is, because he's lost some of the big. I mean, you don't lose. The Chancellor is the second biggest position in UK politics. So to lose your Chancellor is massive, really. To sack him is one thing, but for him to resign is huge. And Sajid Javid as well was the previous Chancellor. So you got two of the previous Chancellors both resigning, effectively saying we got no faith in your economic credentials. That's massive. And that could actually, I don't think it's going to it can't trigger a leadership battle, because, as I say, they've already kind of wasted that card. But all they can do now is appeal to Boris Johnson's better sense of nature. And I just don't think he's got one.
He hasn't got one.
So I know what you mean about him potentially going. I just don't think it's ever a done deal with him.
Don't you have like in Australia, we've got a thing called, or an office called the Governor General.
Yeah.
And I think it's only happened maybe once, twice in history, where he has actually said, you were talking about Alan Sugar the other day.
Yeah.
Where the Governor General has put his finger across the table and said, "You're fired."
Oh, I see. That would be the Queen.
Oh, okay. She's not probably well enough to do such a thing. So
She
she'll have
wouldn't
to.
do.
She wouldn't.
She wouldn't get involved.
Really?
No, it's not. It's that
What
she
about
might be the
Randy
head
Andy? We send him in. He's a dickhead. So why don't we send him in?
Randy Andy.
Yeah.
No, she wouldn't get involved. It's I don't know. I mean, there's probably another committee that could probably trigger something. But as I say, I think they might have wasted that card already. I'm not sure whether it's quite the same system. It's complicated, isn't it? Politics and the way that it's all kind of designed is quite complicated. So you end up hearing about these things after the event. I mean, I'm not aware of it, but then I'm not on top of the political system in that kind of detail.
Yeah. Well, who wants to be, frankly?
Yeah, exactly. It's just not necessary for me to kind of make money. So I'm not. But the Queen certainly could sack him. If she really wanted to.
Lizzie, she's on the job.
We'll
give her the job.
Get Mad Lizzie on it.
Mad Lizzie. Okay.
Mad Lizzie cool. was an exercise guru over here on Good Morning Britain.
Oh, okay. Yeah, no, missed that one. All right. So I've got I've still got and why isn't the market reacting? Oh, the market's not reacting to it, right? Oh, we've been
to the pound?
On the pound, yeah.
Well, that's because this is it's just not new, is it? I mean, headlines kind of
50 people resigning. That's got to be new. That's before.
That's not 50 people yesterday though. That's 50 people over the course of his whole term.
Oh, I thought it was 50 people today or yesterday.
Oh no. 50 people over the whole term have resigned. So only a few in the last few days, but big players, as I say.
I see. Okay. Well, I think that we haven't heard the end of this story, frankly.
No.
Without a doubt.
As I say, MPs are currently on their way to number 10 for a chat. Some of his major MPs that they're on the way for a chat, because there's no question that Boris Johnson is going to lose the next general election. I mean, he may not go, but in 2 years' time, he won't have turned this around. So he's going to lose the next general election. Yeah. And that's what the Tories are now obviously going to be concerned with. They've got 2 years to replace him. They've got 2 years to win a general election, so they could replace him now and still have a chance. So of course they're going to be on his back to say, look, you've got to go. I don't think they can table a no confidence vote anymore. I'm not sure how that all works. There might be something else, and as you say, there might be another avenue they can go down.
Well, here in Australia, what they can do, forget the no confidence, they can just mount a challenge, so they can put someone up against him.
Right
here in Australia, whether that's, and frankly, our parliamentary system would be based almost 100%. One would have thought on yours, given that we're a Commonwealth, but I don't know.
Yeah.
Anyway.
Yeah. I don't know, mate. I don't
know. Who knows? So what are we doing? We're on my chart, right? Okay, so we've been triggered on the pound.
On the radio.
Radio, that's right. Who, me? Now it's my turn, right?
Yeah.
Oil. Let's talk about oil.
Oh, goodness me. Yeah. Oil, all of a sudden sort of turns around. And another kind of scenario for me. And really, this is the point, isn't it? You sort of, I think I've shown a large degree of overconfidence in opinion by trading gold. I should have just stayed well away from that. And it's just sort of, this illustrates to me about staying in your lane. Every now and again with trading, you get reminded of what you're meant to do. And what you're meant to do is get good at something and stick to it, because it should be boring. As soon as you start to kind of expand out and stuff, fine to do it, but test it to the nth degree first, or at least get familiar enough with it where you feel confident. It's very difficult, with things like this. And it's not because it's difficult to stay on top of oil, but it's difficult to stay on top of oil and gold and everything else while you've got your focus, somewhere else. I was not expecting a collapse in the oil market as we've seen. And there's probably a fair reason, but I've got to be honest with you, mate, I'm not on top of it.
No, nor am I. But the reason I'm looking at these charts at the moment, and gold's the same, they are really technical when you
Yes.
well, to my eye, they're technical. And what I see at the moment is oil in a buy zone.
Yes.
So that's kind of why I'm looking at that.
Yeah. Oil would be a buy for me as well, but as I say, I'm surprised of what's happened really with the price action to this point.
Yep. Cool. So okay, we've spoken about oil, gold, the dollar, euro, pound. Haven't spoken about the Aussie. And I find that interesting as well. I'm not sure about the Aussie, to be honest. I've got this bearish outlook for I'm not sure what reason, and it is falling. There's no question about that either. It actually looks in a bit of strife to me.
You know, the Aussie, see, currencies I feel a lot more comfortable with. I think there's enough information for me to go and mine to understand currencies. So with the Aussie, I think it'd be interesting to put it up against, you know, if we compare it against the dollar, it's going to look like everything else. But if we start looking across the board, let's have a look at it against the euro.
Okay. It'll be going well against the euro, has been for a while, of course. There you go.
Yeah, there you go. So we're going well against the euro, and this is
an
where
hourly chart, mind you.
Yeah, but if you
actually that's not so good, because that's showing a euro Aussie uptrend.
It is, but the most recent price action is down.
This week's horrid. Yeah, absolutely.
Yeah, and is it going through? Is it going through the bottom of that trend line?
It's right on it, I think, by the look of it. Probably starts here. Not there yet.
Not there yet. Okay. So possibly, you know, we see the euro start to turn around, as I say, against all currencies when the 27th finally arrives, or 21st, sorry, finally arrives. But I guess my point is the Aussie doesn't look anywhere near as negative when you compare it against some of the other currencies. Against the dollar, everything is just in a mess.
Sure.
But against this, actually, depends which way you look at it. Yes, it's been in a bit of a downtrend, or you know, the euro's been in an uptrend over this, you know, from where you drew your trend line. But actually, if you draw it from, if you have a look from the start of the year, this has just hit a bit of a channel, a bit of an area of consolidation from the highs, and it's headed down again. So chance that it gets back to the lows, I think is pretty good. Because the euro is incredibly weak, and actually the Aussie's not too bad. It's you know, as I say, staying on top of the fundamentals of the currencies is a lot easier. They've just raised interest rates again, and they are in a position where they can probably continue to do so. Things have changed, where commodities, as we've seen with oil coming off recently, things have then changed, and the knock-on effect for the likes of the Aussie and the CAD will be somewhere along the line felt, but things could change again, and you know, commodities might start to get a bit of a boost. The big problem for the Aussie, of course, is if the globe starts to show some actual data which say we're in recession, not good for the Aussie dollar, you know, because then we will start to see global growth being hit and effectively coming out of commodities, you know, not quite as much desire to get into the commodity space. So that's where the Aussie might start to suffer a little bit further. I think maybe a bit of a turning point could be upon us, mate.
Interesting.
Jenny's just asking, do you think gold and oil would bounce back long when they hit their major support, 1700 and 100 respectively? What would make them fall short further? So with gold, I've got to be honest, Jenny, I'm shocked at the move of gold so far. I still think that gold is a long. Where it sort of eventually settles is difficult to know. I think that we probably are at a level of support now that may well hold. Yeah, we're not too far away from the level of support that may well hold. You can see a few levels there, can't you, mate? Where there is that support level. But if it comes down to
actually not on that chart, I can't, because the levels are obvious to me on that chart. On this chart, this is the weekly.
Yeah.
Then yes, there are support levels.
We're on support now.
Right through there, I would imagine.
Yeah. Yeah.
Because of these highs. So it's resistance here at support. It's resistance here at support all the way through here. So yes,
yeah,
we're at support.
Pretty good level already. The inflation narrative should be pushing this higher, but of course it's struggling because of what's going on with the dollar. And also the other thing that we can't sort of take off the table with gold is that gold is often sold if the market sells off, because people are trying to bring back some cash. They're trying to get sort of like heavy on cash again, and rather than sort of collapsing their whole stock portfolio, they collapse on gold. So they'll kind of use gold as a pot. So when the stock market starts to rally, they'll start to build up a pot next to gold, which it almost becomes that is their money. And then when the stock market starts to crash, then they sort of try and readdress the balance of their wealth by selling their gold positions as well. So it's really difficult to know what the fundamental driver is going to be with gold. Gold should have rallied already, but of course, as I say, traders aren't interested in buying gold while the stock market is in the trouble it's at. But to your question, do I think it's going to hit support and go long at 17? Yes, I do. Do I think it's going to go here? Yes, I do. Did I think it was going to happen before? Yes, I did. So I've been wrong twice already. So, just because I think is it going to happen? I'm honestly, you could pluck my opinion out the air and pluck someone else's, and just which you go with is going to be your own opinion. It's going to come down to you. I guess my point is you are just as equipped as I am to speculate on where gold's going, because I haven't got a clue. All I know is that it should be rallying, so I'm going to continue to buy it. But I might well be completely wrong on this one.
And look, I agree 100%. I've got no idea myself. But, well, actually, that's not true. I have got an idea. And I've got an idea because the chart's telling me something. But that's the only thing I've got. And the other thing I do know is that gold is so susceptible to what's going on from a fundamental point of view that the chart may well be wrong. And it's seldom I say that, because the chart always, to the best of my knowledge and experience, will show you sometimes after the event, but often before the event, what's going to happen next. And this chart's been screaming at me for a long time that we've got a massive double top here. And I agree with everybody who says that, but it's got to rally. And conventional wisdom in times of trouble would see that being the case. The problem is, and Ash has given you explanation as to why this is the case, because the US dollar is so hot. But that aside, it hasn't rallied under extreme circumstances over the last, God knows how many years now. We've been in turmoil for a long time. Going on 2.5 years now with COVID. Before that, you name it, Brexits and all sorts of Trumps and all sorts of things were going on before then. Yet gold has not rallied since it hit this level in January, right? Now, what happened in January? Not a lot, but COVID started to come in, right?
January this year?
Yep.
Well, January this year was the turning point in the S&P, which is interesting. It's interesting, the correlation. You got the turning point in the S&P.
Sorry, that's March. It's March when it hit the highs. So that's
March
COVID,
when it hit
right?
the highs. So when the Fed actually started to raise interest rates
And COVID.
and the Ukrainian war.
Yes. Well, a few of those combinations, to my mind, should have had gold having a little retracement and taking on the highs, if not new highs again. But that hasn't happened. And when something doesn't happen, I go into, okay, if X hasn't happened, then Y probably will.
Yeah.
And if I was a gold trader, and I'm not, never have traded gold, and if I saw the euro versus the dollar do this and then give me a lower high, I've got to be in the market there. Sure, got to be. Where it goes from now, I can only give you what the chart is telling me is possible. It's not telling me it's going to happen. It's telling me it's possible. And it's possible for gold to go to there from this chart. And that's all I can say. I can't tell you why. I can't tell you when. I can only tell you it's possible.
And what are you seeing on the chart which drives you towards that?
Okay, when I look at a chart and I look at a reversal of trend or reversal of long-term pattern, if you like, the long-term pattern here is long rally from back in 2018 to 2020. So 2 years of very, 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 very strong buying. Then we had a retracement. Then we had consolidation. Then we had a rally that is so clear and obvious that price doesn't want to go above this level for whatever reason. It doesn't want to go above this level. And now it's starting to go down again. Now, my contention is what generally I see in chart patterns and reversals, what happens on this side will generally happen on this side. And don't ask me why, it's just the way I see things. So I'm expecting, at the very least, price will go to here next and hit that level and probably consolidate like it did over here, and eventually it will break down and go to the next level. So that's my reasoning for thinking it's possible for gold to go here. Is it probable? Don't know. Why will it happen? Don't know. All I can tell you is that's possible.
That's where we kind of where things get interesting, isn't it? I mean, so, you know, it's possible because they are the levels, but what happens next will define whether it goes to the upper level or whether it goes to the lower level. And I guess my sort of like particular opinion about gold is that the way that the market has over leveraged itself, you know, with the central banks, the dollar is going to break, and if the dollar breaks, everything rallies. Everything but the dollar rallies, which is why I am bullish on gold. And that's the main sort of premise of why I'm bullish on gold. Is really because I think the system is cracking, and I think it's about to collapse. And what's interesting about looking at this, I guess that this is interesting, mate. Do you bring up a DXY? Have you got a DXY you can bring up? Great. Now let's look at this on exactly the reverse of that analysis. So if you go back a bit,
that's already happened. There.
That's already happened. If you look on this particular time frame, but if you go back further, can we go back to?
You mean monthly or daily?
Monthly.
Yep.
And go back to 2002. Yeah. So what happened on the way down? I mean, are we on the same kind of premise on that monthly? What happened on the way down from 2002 is now going to happen on the reverse going up again.
What happened in 2002
The high. See the high point? The highest point on your chart there?
Oh, here. Yep.
Yeah. So going on what you were saying about gold,
Mm-hmm.
you know, would you have the same premise?
Of course it could, but there's a massive difference. And the cycle completes, right? I'm really talking cycles here.
Yeah.
There's one there. Up, down, over. Cycle is complete. Next one. Down, up, cycle's complete. These happen day in, day out on 30-minute charts. Next one. Cycle complete. Done. Next one, didn't quite make it. Next one, cycle complete. Done. With this one, to see that complete, you would have to have gone pretty much straight up like that did. Right. So I believe that cycle ended probably there.
Right.
Next cycle kicks in. Done. Next cycle kicks in. Done. Next cycle kicks in. Done. Which is why one of the reasons I think that we're in a new cycle. What that is, I've got no idea.
Interesting.
Absolutely no idea what that cycle is until it reveals itself.
So, and I guess this is the fascinating thing, because obviously you're looking at the dollar in a different way than you're looking for gold, but obviously the correlation is key.
Correlation is always there, but whether it actually happens in the same time frame is completely different.
Well, it's valued in dollars.
Yes, it is. But whether there's something that interrupts that cycle or that correlation, if you like, or it's valued in dollars, yes, I understand that. But the dollar may skew if, for whatever reason, I don't know why. Otherwise, you'd see the US dollar and the gold chart versus the US dollar be exactly the same all the time. And you don't see that all the time.
No.
So there's something skewed that actually changes the cycle or interrupts the cycle. And as I say,
it's interesting, mate. It's actually pretty close. If you were to bring up a monthly chart of gold, then actually what you would see is a big rally between 2002 and 2009, and then coming down as the dollar goes up, and then it's pretty close. I mean, if you put them next to each other on a, but you have to use the monthly. You can put them on the next tab. It's not a problem. Oh yeah.
What chart have I got here? Weekly. So I need the monthly. Go a bit tighter. And where are we looking, mate?
So from 2002. The dollar?
2002. This is going to look really small.
That's okay. We can see it. As long as we've got a line, it's not a problem. There you go. And then 2002 on gold. So
you can do it. You can do it. Not quite. I'll have to go there.
Close enough. That's close enough.
Okay.
So you got rally as the dollar drops.
Yep. Here.
Yep. Then the dollar goes up and then sort of as a consolidation, and the gold comes down and as a sort of consolidation.
Here and here.
Yeah.
But it goes out of kilter there. See, they're both going up here at the same time.
Are they though, or is that moved to the downside? What date is that?
Okay, yeah, you'd have to do that, wouldn't you?
Yeah.
Let's go with. Sorry. Let's go with that began there. April 2014. And April 2014 is there.
Yeah. So still moving down.
Yes.
Then it hits that consolidation area,
Then
just
the
at the
consolidation.
bottom end. While the dollar hits the consolidation at the top end, and then the dollar tanks and gold rallies.
That's January 2017. That's January 2017.
So opposite there. And then when was the next dip in the dollar? Big dip. Not that one. Yeah. I was going to say.
From the top, you mean?
No, yeah, that one. Yeah.
That is March 2020. Oh, we all know what happened then.
Yeah.
Come on, you one more. So it's there.
It's pretty tight.
Yeah, it's not too dusty. Not too dusty. But it has gone, to my mind, it's gone out of kilter a little bit here.
A little bit, yeah, you're right. It's not exactly the complete opposite. But it does kind of suggest, with considering what's happened to gold, I think gold, when you look at it in this particular regard, it's held up pretty well, because while the dollar was rallying hard, gold just stayed in made a huge range, but it was in the upper levels, and it's kind of stuck there.
For now.
For now. Yeah.
For now. Look, I don't know what's going to happen next, mate. I've got no idea, like you. And I just lost my mouse, which is not good because I can't do anything.
I'll tell you what's interesting now. If we zone in on the gold chart, just to kind of finish up, or you can't do anything.
I can't. My mouse has just gone way under the table. I'll have to disappear under the table. so go to your chart.
Okay. Right.
You know what we didn't do on Monday, by the way?
What's that?
We were going to look at the sectors that may benefit by the current economic circumstances.
Right. That was didn't we decide to do that on Monday?
Yeah, we were going to do it on Monday. Oh, we're going to do it today, were we?
Oh, we're going to do it today. Okay. Homework coming up. Right. So would you not say 1, 2, end of cycle? New cycle. 1, 2, potentially.
I've got to get my mouse. I can't do anything. Okay, got my mouse.
Okay. I'm looking here. Let me thicken my lines up so it's the same sort of as yours.
Yep.
This here. 1, 2. End of cycle. Wouldn't you say?
Yep, that's cool.
So this is a new cycle now. This one
but
here.
It's still potentially part of a bigger cycle.
It's still potentially part of a bigger cycle, yeah. Yeah, which I suppose that's the challenge, isn't it? Where you define cycles, where you're defining your cycle from.
Oh, look, 100%. And if you
and
look
also
at
There are cycles within cycles.
You bet there are.
Yeah.
You know, studying cycles is just something like a 7-year university course.
Is it?
You bet it is.
Wow.
But it's one of the most fascinating areas of science that you can ever study. It's amazing. And if you get it right, you can apply this to charts no problem at all.
Oh, I mean, it's this was really Nostradamus's his field, wasn't it? I mean, it was all about studying cycles and how to predict the future with cycles, and that's what his. I'm sure, probably some of the course probably touches on him.
Oh, well, I haven't done it. I wish I had.
Yeah,
but I'm sure it would. Yes, sure it would.
I mean, these are the trend lines that I've got in right now, which kind of gets us close to this area, which is why I quite like this area here. I've got a limit order just down here, but I think regardless of whether we go through this level, and this is really to your point, Jenny, regardless of whether we go through this level, I still think that there's a high probability we get a bounce here, and that bounce is right on your level at 1700. So onto that would be why I would be saying I'm okay to buy in that area. I don't mind buying at 1700 at all. But my question then would be, if I bought and it started to rally, my question would be, is this really so I can get out of those other two longs, or do I think we're actually going to go from 1700? So there's really two sides of it. Do I think we'd rally from 1700? Yes. Just to highlight, Lewis is saying, just to highlight, both the highs look very similar patterns. Yes, that's a great point, Lewis, actually. It's a great point. What Lewis is saying is this here, and then what happened next looks quite similar to to this here.
Mm-hmm.
Which is another interesting viewpoint. So I don't know. I mean, that's only one pattern, and you'd really want to. I think you'd probably want to see this a few times. What tends to happen when gold consolidates at the high, because it didn't happen there. Oops, can't leave those there. No, and I can't go back any further. So yeah, I don't know. There's a few ways to look at it, but anyway, just back to the 1700 level. It's a round number. It's on a trend line. There's some previous closing support here as well. 1700 looks to me like a decent area to try along, in my opinion. But the question then, as I say, is that for my particular trade, is 1700? Am I just trying to get up high enough to be able to kind of aggregate this long to close a position? Or do I think we're actually going to go and rally from 1700? And I won't know that until we're sort of, in the midst of it. And if I'm honest, where I sit today, I'll be quite happy just to get out of this altogether. But I don't know. It really does depend what drives it up. If what drives it up is further turmoil, further uncertainty, further unrest, I'll probably hang on to it. But if it is just a sort of a rally, I might look at it as a dead cat bounce and expect it to come down further.
Well, here I'll add to the complication of this. If where you've got your long entry there,
yeah,
if price doesn't go through there quickly, then the cycle that I'm looking at is incomplete, in my opinion. Because right. you've then got an established range if you bounce off there, right?
Yeah.
You've then got an established range at the top, which in time terms will disrupt that bigger cycle. Therefore, that cycle will no longer be in play for me.
And does that mean we're going long?
Yes, probably.
Right. Yeah.
But I can see that. The range between where is 1700 and 1950, say, I think you could probably stay there for quite some time.
Yeah.
Yeah, there.
Yeah. Well, we're not there yet, but you know, I'm going to be buying there, Jenny, for sure. I tried to convince Jeff to buy, and I'm glad he didn't. But maybe he will at 1700.
Well,
who knows?
I said I will only do it if I get a Jeff signal, and I needed to see that higher low, and it didn't come.
Yeah.
But I mean, that was an absolute pristine place to buy, right? From a chart perspective.
Yeah. Yeah.
We were talking about it on, what was it, daily chart?
Yeah.
Was it? Yeah, there was a big double bottom
was
sitting there.
The daily, we got this bar here.
Yeah. I mean, you know, so many people would have entered a long position there, I would have thought. Justifiably so. And a higher low there certainly would have got me into it. But bang, no thanks. Said, no, not this time.
No. And if the market rallies to this point, I may well be hedging there, looking for 1700. If we go up first, I might sort of just put in a little hedge at that particular point to see if we go down again a little bit. But yeah, I mean, to me, I've got a lot of work to do on gold. Feel a lot more comfortable with the FTSE, and as I wish I'd never tried to.
Look, I think people who've been trading gold for a long, long time are scratching their heads, mate.
Yeah, probably right. Anyway,
I'd like to get it right. I'd like to get this timing right, no matter what happens.
Oh, you seem pretty good on it, mate. I think we should do maybe test out you with gold with your particular approach, because you know, you've been right on the money for this one, and I think you even said an OCO or something somewhere along here, which again would have been the right call.
Don't remember that one.
You I was saying to you, you know, there's a long here, and you said, oh, what about a long and a short, because I see both. And
okay, yep.
And actually, you know, it was absolutely right. The short was triggered, but that's
the thing I must say is I'm extremely impressed with it, because it is acting pretty much as I'm seeing it. So that's a good thing.
Ainsley always says that gold is very technical.
Yeah, well, it looks it to me. Yeah.
Yeah. Yeah. So you know, maybe it's something that you know,
if
now
it respects
now
the three amigos, then what could be better?
Oh, exactly. Well, you know, now I've dipped my toe in. I think maybe we'll continue to look at this one, and then we'll move on to oil and see if we can get that in as well. Anyway, yeah, Lewis says gold respects the levels a lot, which also promotes again the 1700 level as a buy zone. So we'll see what goes on there. But let's wrap it up, mate, and we'll come back next Monday. We've got sectors to work on, what's going to do well in this kind of market. I've got loads of work to do on the weekend for fundamental analysis of currency. So I may not get the chance, but if I do and I get on top of it, then we'll have a discussion either on Monday or Thursday. But let's wrap it for here. Thanks so much, guys, for joining us. Really interesting discussion, and thanks for getting involved. Thank you to you as well, Jeff, as always, and thanks to Marlon too for looking after us. We will have a lovely weekend, guys, and we'll be seeing you on Monday.
You bet we will. And the breakout trade today did not work, so we've got one winner, one break even, one no entry, one loser for the week. There you go. What can I say? We'll continue to pursue that one and see how we travel. Mind you, the winner far outweighed the loser, so I guess you're in a positive place. So that's all good. Thanks, Ash, for being my trading buddy. Thank you all for being our trading buddies, and we look forward to your company on Monday again. Have a great weekend.